Hey everyone, welcome back to Corporate Decoder, the place where we uncover the secrets hidden within official company filings. And today we've got a spicy one from KalVista Pharmaceuticals, incorporated their latest 8K filing, which dropped like a bomb on the 24th of September 25, is packed with news and get this, it info. Vev's raising some serious cash through convertible notes, so buckle up because we are about to decode this deal and see what it really means for the company and its investors. So KalVista Pharmaceuticals Incorporated has just announced a big financial move. Vev sold a substantial amount of what they call convertible senior notes. The total amount is $143.75 million. And get this, they even let the buyers purchase an extra $18.75 million worth. This offering was done privately, and it is a pretty common way for companies to raise money because it skips some of the more complicated registration steps with the government. Now, this big deal actually closed on the 29th of September 2025. The money they got from this is expected to be around $139 million after they paid all the fees and charges. The company says they plan to use this cash for everyday operations and other general business things. But here is where it gets interesting. They specifically mention using some of this money for the commercialization of something called Ectoly. This is a key point because it signals their focus on bringing a specific product to market. It sounds like they might also use some of this money for buying other companies or new technologies in the future, but they don't have any concrete plans for that right now. This whole deal involved some major players. Jefferies Incorporated and TD Securities Incorporated were the main underwriters, or what they call initial purchasers. In this deal, they agreed to buy all these notes and then resell them to other big institutional buyers who are considered qualified buyers. This agreement outlines the standard promises, responsibilities, and warrant. Ties between KalVista and these initial purchases. KalVista also agreed to protect these initial purchases from certain legal troubles related to the sale of these notes, which is pretty standard. Now, let's talk about these convertible senior notes. They are basically a loan that can be turned into stock later on. The notes will pay interest at a rate of 3.250% per year, and this interest will be paid out twice a year starting the 1st of April 2026. These notes are due on the 1st of October 2031. Unless they are paid back early or converted into stock, the company can T-force you to pay back these notes before the 5th of October 2028, but after that date they have the option to redeem them under certain conditions. It is important to know that there is no special fund set up to pay back these notes automatically. The agreement governing these notes also has what they call events of default. These are situations that could trigger the company having to pay back the notes immediately. Here are some of the key ones: the company failing to pay back the main amount of the notes when it is due, or if they fail to pay the interest for more than 30 days. And if the company has to give shares or cash for converting these notes into stock, and they fail to do that properly within 3 business days. That is also an event of default. Another trigger is if the company doesn't give notice about certain company changes, like a merger or a big sale of assets, in the way the agreement specifies if the company breaks any of the ISAs in the notes or the agreement and doesn't fix it within 60 days after being told about it. That is also a problem. And here is a big one: if the company or its major subsidiaries borrow money and owe more than $25 million and they can pay it back. That is also an event of default. Finally, if there are certain bankruptcy or financial trouble situations for the company or its big subsidiaries. It could also lead to the notes coming immediately due. So how do these notes turn into stock when a holder decides to convert their notes? KalVista can choose to pay them back with shares of their common stock cash, or a mix of both. Right now, the deal is set up so that every $1,000 worth of notes can be converted into about 59.49 shares of KalVista stock. This means the initial conversion price is around $16.81 per share initially. There is a cap on how many shares can be issued from these notes, which is around 11.1 million shares. This is all subject to adjustments though. Holders of these notes have some extra benefits if they convert their notes because of something called a make-whole fundamental change. Or if the notes are being called back for redemption, they might get even more shares than the standard rate. And if there is a major change in the company, like a merger or sale, holders can force KalVista to buy back their notes for the full price plus any unpaid interest. Now here is how and when holders can actually convert their notes. They can do it anytime before the 1st of July 2031 in specific amounts. If the company's stock price has been performing well. For example, if the stock price stays above 130% of the conversion price for at least 20 days in a row during a certain period. That is a signal they can convert. They can also convert if the trading price of the notes drops significantly compared to the stock price for a period of 10 consecutive days, and of course if KalVista decides to call back the notes for redemption, or if certain other big corporate events happen, holders have the right to convert their notes before the redemption date or before the event takes place, starting the 1st of July 2031. All remaining notes can be converted regardless of these conditions until just before the final maturity date of the 1st October 2031. KalVista put out a couple of press releases about this offering. One on the 24th of September 2025 announced they were planning to offer these notes, and another one on the same day announced the pricing of the deal. These are important because they give you the company's own spin on the news. This filing also includes what the company calls forward looking statements. These are essentially statements about what they hope or expect to happen in the future, like how they'll use the money from this note sale. They use words like anticipates, believes, could, estimates, expects, intends, etc. to signal these are not concrete facts. It is important to remember that these statements come with risks and uncertainties, and the actual results could be very different from what they expect, so it is always good to look at their full risk factors in their other filings with the Securities and Exchange Commission. So what is the big picture here? KalVista Pharmaceuticals Incorporated is raising a significant amount of money through convertible notes. This is a strategic move that signals a few things. First, it shows they are confident enough in their future to take on debt that could eventually become equity. Second, they're very clearly focused on commercializing Ectoly. This means they likely believe this product has strong market potential, and they need the capital to push it forward. The terms of the convertible notes are pretty standard, offering some flexibility for both the company and the investors. If the company's stock performs well, the notes could convert into shares, which would dilute existing share holders, but also reduce the company's debt burden on the flip side. If the company falters, the bondholders might just get their money back with interest. The risks mentioned are typical for a company in the pharmaceutical industry: regulatory hurdles, market competition, and the success of their drug pipeline are always key concerns. The company also mentions potential acquisitions and investments, which if executed well could significantly boost their growth, but also carry substantial risk. In my opinion, KalVista is making a calculated bet. They are investing heavily in Ectoly, and this funding gives them the runway to do that. The convertible note structure is a smart way to raise capital, potentially avoiding upfront equity dilute. Ion, if their stock price continues to rise, the main question will be the success of Ectoly and how effectively they manage their finances going forward. The company seems to be charting an aggressive growth path. Alright, that is our decoded look at KalVista Pharmaceuticals' latest SEC filing. What is your take on this convertible note offering and what it means for the company's future? Let us know in the comments below if you found this breakdown valuable. Please hit that like button, it really helps us out. Subscribe for more in-depth corporate analyses, and don't forget to join our Discord community linked in the description for more exclusive content and discussions. Thanks for watching, and we'll see you in the next episode of Corporate Decoder.